Today is July 22nd edition of Back Roads of Illinois. We were Central Illinois agriculture source, and in the Midwest alongside in Central Illinois agriculture, we were glad you're here. The tariff from China, SAF production, farmland's value. Put the tariff on China. We've heard from the campaign trail from last week about the tariff to China in the Republican National Convention in Milwaukee, Wisconsin. The soybean market says different story about the tariff to China. SAF production. Substantially, aviation fuel is in high production for right now, with the ethanol production demand is higher than expected. Do you remember that they put a new GREET program by this administration on May? However, we've been hearing from the campaign trail from last week they will support the oil industry for this election season. The farmland's value has been potentially passed and higher than expected because the commodity markets has continued to decrease for right now with the commodity prices. In the Midwest, farmland's value has been increased fair difference between the commodity markets on the markets. We have a special guest on the show for today. We were joining with Dr. Aaron Hanger from the University of Illinois in Urbana and Champaign. Dr. Hanger is specialized in the weeds and herbicides for the University of Illinois. We were going to visit John Payne from Advanced Trading in Bloomington. We were talking with Craig Turner from Stonex Financial. We were getting updates on Bayer with Jason Carr. Stay tuned on Back Roads of Illinois. Today, we were talking about herbicides and weeds in the field in Central Illinois with the University of Illinois College of Agriculture and Consumer Environment Sciences in Urbana with Dr. Aaron Hanger. Welcome to the show. How are you, Dr. Hanger? We were happy to talk with you on weeds.
Well, thank you very much. I look forward to our conversation today. We've got quite a few issues around weeds this year, I think, in Illinois. Some good, some not so good. So let's get into it.
Let's go to start with our conversation about updating on the field in Central Illinois.
One thing that's quite a bit different for our program in 2024 compared with last year is that we had a lot of good precipitation events to get many of our soil residual herbicides moved into the soil solution. So we have seen some very good activity out of many of the pre-emergence products, both in corn and soybean. And by and large, most of our post applications went on fairly timely also. We've seen some very good growing conditions that have enabled many of the post-applied products to work fairly effectively. However, of course, we still have concerns about the continued evolution of herbicide resistance in many of our water hemp populations, primarily not only here in Central Illinois, but literally around the entire state of Illinois.
How was the weather on last Monday night, and do you see impacting the yields?
Well, the weather we had early last week obviously was very warm, very humid. Fortunately, again, many of the post-applied herbicide applications had been made prior to that time. However, we do have concerns when we do get into those very warm conditions, very humid conditions about the possibility of increased crop injury from many of the foliar applied herbicides that we do use, especially those that are more contact in nature. one thing, of course, that we are anticipating a little bit right now is just about this third week of July. Historically, has really been about the time of the year where we start to see soybean fields that, at least from the roadside, have appeared to be fairly clean or devoid of water hemp. This third week is often the time that we start to see these plants pop up above the soybean canopy. And what we have learned many, many years ago with Dr. Larry Steckel, when he was here at the University of Illinois working on his PhD, he constructed some shade experiments to look at how shade tolerant this species is. And essentially, the results from his work would tell us that water hemp is a very shade tolerant species. So if we have a soybean field that we have a canopy that's developed, but if there were some small plants before that canopy formed that were still alive in there, generally speaking, those are likely the ones that are going to be popping up through that canopy. So again, remain vigilant. If it's a very small number of plants that are poking above the soybean canopy, by all means, if you've got the ability to, if nothing else, walk those plants with a hoe or a weed hook and remove them from there. The whole key issue now that we're really trying to promote is not necessarily having a respray scenario, but in other words, trying to do everything that we can in addition to using herbicides that will reduce the potential for any surviving plants to make seed. As we talked about and continue to talk about in this new era of metabolic herbicide resistance, our ability to predict which products remain effective and which ones do not remain effective varies by the growing season. We caution people just because something might have worked effectively this year, there's no guarantee that it will work again that way next year or even the year after that. So right now, really what we focus on is what, in addition to using herbicides, can individual farmers use to try to limit or even prevent any seed production? Because right now, in this uncertain age that we find ourselves in from a research standpoint, the only thing that we really know with indeed certainty is the fact that if there's no seed produced at the end of the growing season, there's no change in the frequency of any of these resistance alleles. And right now, again, that's really all that we do know. We see patterns of evolved herbicide resistance in water hemp that really, I guess, make us consider having to rewrite the textbooks. Historically, we would always think that resistance was something that was somewhat predictable if we kept using the same active ingredient or the same group herbicides from the same group over and over again. But we've actually identified now populations of water hemp that are demonstrating resistance to herbicides that were never treated or never used on that population previously. And so, again, it's going to be something that is going to continue to evolve in the species. We see resistance to many of our soil applied products as well. And how that resistance tend to be manifest is that the length of residual weed control gets less and less. And so if, for example, we went back and looked at our data from clear back in the mid 1990s, and many of the soil applied herbicides in the PPO class were very effective against water hemp and other amaranthus species. Going back and looking at our data, from 96 on a sensitive population, we were still getting well over 90% control of that population 6 weeks after we planted. But if we use the same product on now a resistant population, that time is probably going to be cut almost in half. So instead of seeing 90% control at 6 weeks on many of these resistant populations, we're actually going to be making a foliar applied or applying a foliar applied herbicide probably within about 21 to 28 days. So this problem will continue to evolve. And again, we really don't see any new active ingredients, especially not in the post arena, coming into the marketplace that are going to be a solution for this. So it's a little bit tenuous for us as well. We do have continued concerns about all
more water
herbicides.
hemp and pigweeds with the weather. On last Monday night, severe weather in Champaign County.
As we mentioned, we will probably be seeing water hemp now poking above soybean canopies here probably yet this week. We have seen some instances where, of course, water hemp has emerged and it was failed to be controlled by, we assume, by a post-herbicide application. So the likelihood of us, getting the entire season without, seeing increased presence of this particular species is probably pretty low. Anywhere where, a canopy has been damaged by high wind speeds, for example, especially in corn, if that allows more of the sunlight now down through the canopy to the soil surface and any emerged plants, likelihood that they will grow very, very rapidly under warm air temperatures as well as good soil moisture conditions. We did have someone the other day ask about observations that we made this year with respect to herbicide drift and in particular off-target exposure of soybean to dicamba. Again, that has happened again this year. As we've said many, many times before, it's hard to find a species more sensitive to dicamba than is sensitive or non-transformed soybean. It just takes a very, very minimal amount of dicamba to cause an observable phenotypic response, which typically includes leaf cupping. We don't expect it, or we haven't really seen it as widespread as we had in previous years, especially as 2019 was probably one of the worst years that we had to see this damage on sensitive soybean. It still happens. It's happened virtually every year that dicamba has been in the marketplace, starting in the late 1960s or early 1970s. The application deadline that I think that was imposed by the Illinois Department of Agriculture and the temperature restriction on the labels of the soybean products, I think has been very helpful in reducing the off-target instances because, again, as we've said again many, many times, that volatility is a chemical process and we simply cannot label or write a label statement that's going to eliminate volatility in all instances. Volatility tends to be driven by temperature, and so at higher temperatures, the likelihood of a product like dicamba increases. So by having those temperature restrictions on there by these earlier application deadlines, I think that's probably been a very, very good move. As many of your listeners are probably aware, the Circuit Court in Arizona vacated the labels, the three herbicides labeled for post or for use in dicamba soybean. Earlier here in 2024, two of the registrants have applied or petitioned EPA for new labels. So like these dicamba products can be used again in dicamba resistant soybean. But it's very uncertain right now whether the agency will grant those labels again as we move forward out of the 2024 growing season. So a lot of uncertainty about what the dicamba soybean situation would look like in 2025.
Dr. Hanger, do you have any concerns about the canvas situation and the legislation in Springfield?
Yes, we do actually. We've seen instances now in at least two legislative sessions where bills have been introduced, very specific bills to prohibit the use of dicamba across the entire state of Illinois and not just its use in soybean or corn. Both times those bills, I don't believe they moved out of committee either time. We anticipate that they will be reintroduced again in the future. A lot of the public concern about off-target herbicide movement is not necessarily damage to sensitive soybean, but rather damage to other species, plant species in the landscape. And in particular, many species of trees have shown instances of damage from off-target herbicide movement, probably much more so frequently than since 2017, since dicamba technology was brought into soybean. These are going to have to be continued to things that we're going to have to continue to watch and monitor. I've said many, many times before, we can grow soybean in Illinois without the use of dicamba. But because of the evolving resistance situations that we see to many of our corn herbicides, we will need dicamba used in corn much more frequently moving forward. And so it's going to be a herbicide that will have increasing importance for us in corn. And so we really, really need to be aware, be cognizant of off-target injury, try to reduce that likelihood however we can, whenever we can, because again, it's going to have to be an active ingredient that will become very, very important for us in our corn crop as well again.
How many species in the state of Illinois?
How many weed species? That's a very good question for which I don't really have a good answer. We can define a weed a lot of different ways, but simply a weed is just something that we don't want growing where it is. So it really is a definition that has a lot of human aspect to it. for most of what we would consider problematic weed species for Illinois. Farmers, either corn farmers or soybean farmers or wheat growers, for example, you could probably come up with a list of about 2 dozen, maybe 3 dozen that would be fairly common and fairly problematic for farmers. But that certainly doesn't restrict that list to only 2 to 3 dozen. There may be a completely different species that is very problematic, let's say in a pasture setting or in a hay field that we don't typically see in a cornfield or a soybean field. So of the 1,500 some odd plant species known to grow here in the state of Illinois, again, the ones that we considered weeds would be a reasonably small proportion of that total.
Do you have any final thoughts about this season?
Again, I think it's been a fairly good season. I think many of the custom applicators were successful with their applications. I don't know of many that would necessarily still be running well behind schedule. I think a lot of the local ones here in the Champaign area finished up their post application probably about 2 weeks ago. Again, it's just something we need to remain cognizant and aware for the rest of the growing season, just to see what may again be lurking underneath the canopy that we're going to see here very, very shortly. And again, if there's scenarios, if there's instances where we can do another technique to eliminate the potential for weed seed being produced here at the harvest time, that'll be, any weed seed that is produced. I guess another way to say that is any weed seed that is produced, that's going to have to be something that we'll have to contend with for very many years into the future. It's not that all that weed seed germinates in one year. We certainly have instances where we have species that seed longevity in the soil may be just a couple of years. Whereas we have other species, for example, velvet leaf, that seed could be remaining viable in the soil for 50 years, 60 years, perhaps even 80 years. So anything that we do now to limit seed production actually is something that we're going to be paid back as an investment of time and effort for many, many years into the future.
Thanks for coming, Dr. Hanger.
Thank you for having me on. Appreciate it very much.
This is Dr. Hanger from the University of Illinois in Urbana-on-Back Roads of Illinois. Welcome back to the show. Otherwise, we're joining with John Payne from Advanced Trading. How are you today?
I am fantastic.
John, we're glad you're here again.
I'm fantastic, Caesar. I appreciate you having me on as always. Really love what you're trying to do here and grow the market base and the folks that follow you. So I appreciate you having me on. And things are good up here in Northern Illinois. Hope they're good in Southern Illinois or Central Illinois.
Let's start with our conversation on the corn yields for right now with these markets.
Well, this is a touchy issue for folks online. I don't want to pretend like I'm in every area, and I'm certainly not an agronomist here, so I don't want to point towards any type of knowledge of how the crop is going other than just simply looking at moisture levels. And that's kind of what we look at, moisture and temperature. And we've got some models that we use at Advanced Trading, and we've got a couple of them. So they're not all perfect, and it's essentially kind of a guess in my opinion. But the models are above trend for the ones that I at least kind of follow. For corn, they're looking at 184 bushels an acre right now. Obviously, there's a lot of time still to go, but we're kind of through pollination or going through pollination for a lot of the crop. And we're not looking at heat, and we've got a lot of moisture just built up in the subsoil. So at this point, if we're going to do a plus trend yield, I would think that it would be in this kind of weather situation. Now, we could just simply do trend, and I think the USDA has factored a lot of that in. At least they're trading a 181 in their reports. So 3 bushels an acre over wouldn't really crush the markets, but we've done a decent job of raising demand in the last few reports, and I would think that we probably haven't priced in a higher yield yet. Although I think you look at where the old crops are trading, that low target where we've gone off in July, in that high 380 level would be kind of a potential point for where December could end.
What is your sources for the yields for right now?
Well, I am using, what are we using here? Let me pull it up real quick. We've got T-Storm's update would be one of them, and they haven't come out with theirs yet, but we've got our own proprietary yields using NDVI, I believe is the term, which kind of calculates the amount of rainfall relative to average, and then cross-referencing that with crop conditions. And I think we're at 184.7 and 52.4 for beans. So, between that and then the big crop you're getting in wheat, at least we had in wheat, and then in spring markets as well. Spring wheat markets, I have folk, and this is just anecdotal, but up in the Dakotas, they're growing 100 bushels per acre spring wheat. So there's a lot of feed grain around. I would imagine that the markets have priced a lot of that in, but I do kind of worry here that we have, it's kind of like a line, and there's only so much space to get on the ride. And if you've got to wait, you're going to get a cheaper price. So I think, my thoughts would be to get it moved earlier than later, especially if you've got old crop. But a lot of it depends on if those yield numbers come in, or maybe we get some news out of China, and that would certainly be helpful as well, like we got today.
John, we were hearing from the campaign trail from last week about tariffs to China. Do you have any concerns about the commonwealth of the soybean markets?
Yes, I do have concerns about the soybean markets. I think every concern I have has probably been echoed by folks you've talked to, just due to the overwhelming supply that we're having in this country. Now, crush margins are good, so we'll start there. When you're looking at demand for China, or I'm sorry, demand for soybeans, you're looking at two places. You're looking at U.S. crush, and you're looking at exports. And really, exports are going to lie over to China. I mean, the majority of our business is heading overseas to China. So, firstly, crush is good, as we've seen. The beans price come off, down into the mid tens. We haven't seen meal fall as much, and oil has actually rallied a little bit since the start of the year. So you've got crush margins that have gone up, and I mean, I think we're at $1.50 as of Friday. So that's a good number. $1.50 a bushel is going to make those folks money, and it's going to inquire them to be in the market and buying ahead, especially when there's uncertainty about what can be grown. But the latter, which is Brazil, or which is China demand, it does concern me, Caesar. The demand for China in general is decent. They announced this morning that record exports to Brazil, from Brazil to China were seen last month. But the U.S. is very behind on bookings, and I would imagine if the election goes the way that the odds makers favor it right now, and that can change. But if the favorite would be President Trump, that he would be in charge here over the next 4 years. And my thoughts would be that China would be, increased tariffs. Now, here's the thing, Caesar, you have to remember, China can kind of play with their currency a little bit to offset these tariffs. So if tariffs are a certain level and China weakens their currency, they can kind of overcome that and increase their own demand that way. But it's going to come at a cost to U.S. for import demand. So last night, actually, and we're recording this on a Monday, Sunday night, China announced a reserve ratio cut and an interest rate cut to not record lows, but really lows we haven't seen since pre-U.S. financial crisis. And so you've got China that's trying to boost consumption in their economy and support prices. And that's a bullish thing. I mean, if China wants to raise prices, they could certainly do it by cutting interest rates there. I just do wonder how much room they have, though, as they're not going to want to bring too much inflation into their country. But it's something that they're going to try to do because per their last CPI report, I don't think they had any food inflation. I think it was like deflationary by 1% or 2%. And in the case of inflation itself, I mean, their inflation numbers are below the U.S., which is something you and I haven't seen in our lifetime. So it's an interesting market. I'd like to think that the markets could certainly turn around. To see us trade $12 beans would not be out of the question. But the worry you have is what does that bring with it? And that would be more acreage. Certainly in Brazil, which they've announced last week, they're going to be increasing their acreage year over year. But also in the United States, maybe not overall acres total, but I think you'll see shifting from corn to soybeans, especially if corn is going to trade, mid fours for 2025 with the beans in the 11s.
What is the export numbers from Brazil to China for right now?
Well, I want to say they're approaching 100 million metric tons. I mean, I don't have the numbers in front of me, but they're going up every single year. And the worry I have is, the market needs to get cheap enough. If this is a free market economy, the market needs to get cheap enough so that supply can ration itself. So demand is easy to ration. Labor demand or demand for a commodity, you just stop buying it. The price gets too high, you stop buying it. Or you get a lot of supply and you have a lot of choice to buy. But on the supply side, rationing, and this is where it's hard for for farm row crop producers to ration supply because they only grow once a year. So it's hard to kind of say to a farmer, well, let's just not grow this year. That doesn't really work unless you have something that you can substitute with it. And we're certainly seeing that. I think folks went to wheat last year. I don't think that'll be the case next year. And then I think you also saw a lot of folks putting in solar panels, which I think is a substituting factor. But, outside of that, there just isn't a whole lot we can do other than cut acreage. And if the Brazilians aren't going to cut acreage, it's probably going to be up to the US to do it. And the catch-22 to that is if we cut acreage, then we're just going to lose market share, just like we have in the wheat markets. So this is a problem. It's one that can be solved by additional US demand for product. And I think they're trying to do that with additional, sustainable aviation fuel and biodiesel and things like that. But that's a drop in the bucket relative to what we can send overseas. So until that changes, I would be a little more sheepish to be buying soybeans. But, as I've mentioned, this is a futures market. Much of what I'm saying is priced in. So at this point, I think there's some value here. But if you watch those crush margins in the US and they get, they're $1.50 right now. If they would squeeze down to $1, I think that's a kind of a signal that you don't want to be getting too long of beans.
Do you see more funds for right now?
Well, I think selling will continue. The hard thing about spec money is it's a backward-looking indicator. So if you're watching COT numbers and you want to trade off that, I mean, you would have been buying Friday, but that's already 20 cents off the low. So, it's hard for folks to want to chase those kind of markets. And then also the fact that short covering can happen quickly, and the farmer, remember, is long here. So I think they'll be selling into the market as well. So again, I think the longer term picture, like looking into March, beyond March of next year, there is some story with Brazil needing to grow corn. But in the short run, I don't see a carry out problem for corn. Soybeans are a little different because you're kind of coming. It's like if I'm broke and I'm waiting for a paycheck. That's a little bit where the beans are. They don't have a lot of money right now and they're waiting for a paycheck to hit. Corn has a savings account, and its paycheck that's going to come is just going to add to that savings account potentially. So it can ration itself a little bit better. I think it can get cheaper. And I think the problem right now is just going to be that our logistics can only move so much domestically. Domestic demand is pretty good. But I don't know how much higher it can go, given that I've seen livestock numbers not look great, and on the poultry side of it, certainly not. And then the hogs, I mean, the margins have been pretty pathetic. So I don't think you're going to see a whole lot of, additional feed demand come online. So without oil prices being high and the demand for ethanol being there, and then the export markets, it's going to be a tough road to hoe for the next couple of quarters for U.S. Row crop ags, in my opinion.
How was the CFTC report on Friday?
Record short. And so that's what I was saying earlier, Caesar. The funds are in it. And the story that I'm mentioning, I mean, I can sound really bearish right now. I can get all sorts of stories up. I mean, talk for hours about how bad things are. But I've been doing this long enough to know that typically when things are the worst is when the market makes its lows. So the COT report showed record short corn. So you've got a heavy short market. And then you have in soybeans, we're not quite there, but it could get worse. But again, I think there's a domestic buyer of story of beans here, just given that, the yield, if it would happen to do 52, we're still somewhat tight. I don't think it's huge, but with corn, it's a little easier to sell just due to the fact that we have a lot of stocks on hand. But in the case of the COT report, I'd be careful here, because even after today, if you're chasing that number on record shorts, we're going to have a pretty hefty rally behind us now. And the question is, have we lifted 20, 30,000 shorts that, could easily be put back on? So I'd be a little sheepish to be buying here. I'd wait for delivery to pass for September delivery. And, kind of see what the harvest numbers say before you jump in.
Is there anything would you like to go to be telling our listeners about the cattle markets for today's deal?
Well, crush margins are pretty good. So when I say crush margins for cattle, I'm talking about, and you can calculate themselves. You just take the feeder numbers. I take 2 contracts of feeder cattle. I take a contract and a half of corn, and then against 5 live cattle contracts, kind of spread down the curve. And the feeder markets are, they look really good. So I mean, we're trading $250 feeder cattle, which you would think are high, but with $300 choice or $315 choice, and live prices that are getting bid up here closer to 189. There's some value, in my opinion, to one to own feeder cattle. Now, this isn't really the greatest time of the year for it. I mean, the next couple of weeks should be okay, but once you get past that Memorial Day weekend, and not to mention the fact that we've got an economy that's kind of purposely being slowed. You worry about beef, but those stories are already in the cards. And you look at food service demand; it's falling, but it's still there. And beef, trim prices are good, and I think at this point, there's a lot of value out there in the more longer term, just due to the fact that the cattle numbers really aren't going up, even though the report on Friday showed them a little up year over year. But I think that's just due to some better weather and maybe some heifer retention on certain markets. But I would be a little bit sheepish here to be going out and selling ahead too aggressively. If I would probably be looking at those April. But again, this is, the market peaked last year in October. So there's probably some headwind here or some runway if the market wants to get a little more bullish on a rate cut story or on a cheaper dollar.
How is the Packers' numbers?
Packer margins are pretty good. In the case of hogs, not bad. The cutouts maintain some strength here, and the front month futures have fallen. And it'll get really good here if the cutout could stay here through, August, maybe even early September. On the beef side, cutouts, where it's been. The profit margins. I would imagine the Packers a little bit behind the 8 ball there. And I think that's why they've got to buy breaks. They just they don't want to let the market get too far ahead of them. Because, the U.S. economy would heat up again. I mean, we could see $350 choice by next summer. I mean, the numbers just aren't there for beef demand to be strong. The worry you have here is just cheaper chicken prices, turkey breast prices are low, and pork prices are low. So how expensive can beef really get before substitutions kick in? But everybody's trying to get people in the door to eat, and that's the push right now. Restaurant services are starting to lower prices a little bit, but U.S. wages are remaining where they are, and as long as they are, I think you'll see the beef cutout stay somewhat close to 300, maybe get down into that 280 level by the time things fall. But it's a supported market if numbers aren't going to go up.
Do you have any final thoughts?
Watch the currency markets. So that's something I kind of write about. And if anybody listens to you and wants to follow along with my emails, give me a shout. You can email me at jpayne@advanced-trading.com. My thoughts would be to watch the currency level, watch the Brazilian real, and watch the Mexican peso. Those are 2 big markets to watch for beans and corn and hogs. Those are markets I follow. So in the case of the real, we rallied today. The dollar is going to be a continued problem. And we didn't see that kind of action today. I think the market liked what it got out of China, but I think eventually you're going to see the Chinese kind of refusing to they're just going to buy on the margins because not only do they now want to buy U.S. product, especially if we get leadership going a certain way, or don't. I mean, I think regardless, it's going to be difficult for China to kind of be friendly with the U.S., even with the Republican House and Senate. But at this point, it's a good day. And so we're talking on a Monday, we're up 3% on beans and 2.5% on corn. I think you get another 2.5-3% on each of those markets. It's from a farmer's perspective, you got to be looking at moving it because interest rates are only going to they'll still be positive. And yes, we're getting rate cuts, but we're still going to keep this inflation story in check. And it's something that the Fed has been very, very cognizant of. And so just finishing this out on politics, and I'm not going to be political one way or the other, but unless one of these guys changes the Federal Reserve, and that's a big one, I don't think it matters much to the market who the president is. I think taxes matter, and I think that certainly farm policy matters, but in the very short run, if inflation is something that we need to crack, they're going to try to put their foot on commodity prices, and that's going to be a tough market for the farmer to perform in.
Thank you very much.
Thank you, Caesar. It's always a pleasure to talk to you, my man.
This is John Payne from Advanced Trading on Back Roads of Illinois. We are here with Craig Turner from Stonex Financial. Welcome to the show. How are you, Craig?
I'm doing great. How are you? Who's in charge of what group runs it? We just usually see the results.
Craig, how do you see the grain market for today's close?
Oh, well, we've had pretty big jump today in soybeans, 30 cents higher. Canola was over $20 higher a ton. Corn rallied 10. Wheat was up a little bit. But at the end of the day, funds are just too short the soybean market. They were record short coming into this week based on the CFTC commitment of traders report, which is rare to be record short in July. You can definitely see, record shorts being built in, September, October, November, but we're not even the most critical month here of August for pod setting is upon us, and it's hot and dry. So we're seeing fund short covering. We're seeing some new buying coming into the market. Soybeans certainly could, in this kind of environment, maybe they can test $11 again. We'll see. Corn seems to be a follower. I mean, a lot of the corn is already made, finishing weather counts, but we're going to get through a bulk of the most critical times for corn with not too much of a problem. So, and with soybean and with wheat here, the winter wheat harvest is, winter wheat is done, and we may get some problems with spring wheat. But today's close was definitely driven by soybeans, and the forecast here is hot and it's dry for the Midwest, so we certainly could maybe keep on going after today.
How about the wheat markets?
Well, the wheat markets are interesting because there's a tale of really two sets of metrics. On one side, you take a look at the U.S. ending stocks, and after last WASDE, it's bearish, right? We're at a 44% stock to usage. That's a very bearish number. And if you look at it just from that perspective, you would think wheat would be, lower. But on the flip side, global major exporter ending stocks are as tight as they've been since 2007. So what that tells us is the rest of the world is tight on exportable stocks. And there is this tipping point where if you start to see demand coming over the United States, it's going to be telling us we're kind of the last game in town and the rest of the world is out of exportable wheat. And if that's the case, then the funds can come out of their shorts very fast. So you never know exactly when you hit that tipping point. But I'd much rather be long wheat than short wheat, especially at these prices. And as long as the spring wheat crop is good or at least decent up in the northern plains, I think that's going to be supportive for wheat going forward. Because even though Canada, grows of over 20 million, acres of wheat, and a majority of that is spring wheat, they're going to be tight year over year. They may have the tightest spring wheat stock usage that we've seen in decades. So wheat's definitely supportive here. You tend to make a low in winter wheat by now, and sometimes spring wheat by September and by September. But we're very likely to be putting in some longer term lows here.
What is going on in the Black Sea region?
It's hot and dry. I mean, there's stress. There's definitely stress in the with the crops over there, and it's not just wheat. Corn. Also, EU and Ukraine on the specialty oil side. So the canola, rapeseed that they grow over there, and also the sunflower are under stress. And if you take a look at the latest charts of soybeans and canola. You'll see that reflected in the prices. And of course, you have the wheat market. What's interesting, there's been talk all season now of lower production come out of Russia. Over the past couple of weeks, they've thought, well, okay, well maybe we're going to be at 84 million metric tons. Things aren't as bad, but I don't think their current, it is hot and dry over there. So, and also France and Germany are having some concerns about production too. So we'll see how this all goes, but there's a reason why wheat has been somewhat bullish here, or at least been finding a bottom, and you can make a case on the charts a double bottom. So, and the Black Sea is, the tightness and the weather conditions in the Black Sea are part of that too.
Is there anything would you like to go to be telling our listeners about the beef demand?
I think it's a great question. I think the story of today is probably, the cattle on feed report was on Friday, and the placements were lower than, were lower than expected. We'll see what happens here with the livestock. These high prices of beef, will eventually and have been hurting some of the retail sales that we see out there. But when we do come into the holiday periods, historically, the demand comes back. So I think you can kind of be bullish or bearish depending on what set of numbers you look at there. But I would say, and also too, if prices stay high and demand is strong enough, I would expect to see more imports of beef as we go, into the United States as we go forward. But the cattle on feed, the placements were lower than expected, and that's got to kind of make you wonder here about, my biggest takeaway is, we have the grain available. There's definitely demand for beef. You have these high prices. You would think there'd be more of an incentive to get more animals on the feedlots to help with the supply and demand story here on the beef market, and we're just not seeing that.
How was the numbers in the cattle on feed?
Well, we were below. It came in as expected, except for the placements, right, and the marketings. So it's just it was lower than expected. The market was trading it today. We'll take we finished on the day here. Let's take a look. Feeders at one point were up 2 points and then came back down. Live cattle was up a full point and then finished, maybe 75 cents higher. So I guess the market doesn't, care as much as they originally did when we opened up higher. So we'll see. I mean, it's listen, you take a look at technically, you would think at some point we would break down. Usually these prices don't live here, for a long time, but and technically, we are, if we take a look at a weekly or a monthly chart, it would suggest that we are starting to see a little bit more of a bearish trend in the market. But we're tight, and it's we're just not seeing and even with the high prices, we're just not seeing enough cattle coming back on feed.
Do you have any final thoughts?
I think what we're going to be seeing here over the next couple of months is corn and soybeans making some very long-term bottoms. We are going to be under cost of production for corn, not for if you rent land, and then if you own land, we could be very well close, to break-even prices. Same with soybeans. So South America next year, Brazil's projected about have a 169 million metric tons. That's going to be a lot of soybeans, right? Even if the yield, we may have 1 million acres less of soybeans in the August WASDE, but we'll probably have, unless there's some real damage done to the crop over the next month, It's a very good chance we can have above trendline yields. Regardless, soybeans are likely an adequately to burdensomely supplied market going forward that really shouldn't have a 2.6 or 2.65 multiple to corn. Corn's already well supplied, 2 billion carryout. I think some of the private analysts are saying like 182, 183 now. Whatever that may be, even if acres come down a little bit by 500,000 or 1 million, there's going to be corn out there. So I would think the corn to soybean ratio is probably closer to 2.5 at one point. So if a harvest low of corn is around 4, that would suggest $10 for beans. Wheat tends to trade 50% of premium on average to corn between when you average out all three classes. So that puts an average price around 6 at harvest. The thing is, once we get through these harvest lows here, one of two things or both have to happen. These prices are going to stimulate demand, which they already are. And if they don't stimulate enough demand, new crop for 25 prices can come down enough to discourage acres. Maybe not in the heart of the Midwest, but the farther you get away from the heart of the Corn Belt, you will see either less acres, or they'll go into hay or milo, or up north it could be oats and specialty crops. I mean, in Colorado it could just be small changes like wheat to chickpeas, or in the Delta more cotton or peanuts, and the southeast of the United States. But these things tend to happen. The whole point being is either demand comes in and fixes things on the old crop, and when I say old crop, it's what's new crop now. That's going to be old crop, considered old crop in a couple of months from now, or the new crop, which is technically the red, but for 2025. And those are the trends we're watching, and it's we're probably on the verge of putting in some pretty long-term low prices here in the grain and oilseed markets.
Thanks, Craig.
You're welcome. Thanks for having me.
This is Craig Turner from Stonex Financial on Back Roads of Illinois.
All right. Thanks a lot, Caesar. Have a good rest of your day.
And welcome back to the show. We were joining with Jason Carr for Bear. Welcome to the show. How are you been?
Thanks, Cesar. It's great to talk to you again. Always enjoy it. And yeah, things have been great. It's been a great summer so far.
Let's start with our conversation about the growing season in central Illinois.
Yeah, it started off this summer kind of like last year, kind of dry in June. It was wet early, and folks got the crop in the ground kind of later than we would have liked to have seen. But we started catching some rains in July, and I think it's starting to catch up.
How is the beans for right now?
Yeah, they're like I mentioned, they're looking a lot better. I was pretty nervous about them in June, especially with the late planting, but the rains and the warm weather we've had, really not overly hot, but warm enough to get everything caught up. They're looking really good. They're getting, starting to set pods. I've looked at a lot that are, getting off to a real nice start. If we continue to get some good rains here in July and August, I think we should have a pretty nice crop.
Jason, how do you recommend for dicamba or Roundup for this growing season with thrifting?
So we're past the cutoff date for dicamba for beans, so folks should not be spraying dicamba on their beans anymore. Once the weather gets hot, hot and humid, we see more inversions and we have more problems with off-target movement, and so we don't want to see that. And we're past the cutoff date, like I said, in Illinois and in most other states. And actually, the label is not current right now, and so for the rest of this year, we should not see any dicamba sprayed on beans. Hopefully we're to the point where most of the beans are canopied. If folks have a weed problem at this point in the growing season, there's not a lot of options left. They might want to consider getting out there with a hoe and chopping them out.
What do you recommend for fungicide?
Yeah, I think it's definitely about the time we should be getting fungicide on beans right now. It's very timely. Kind of that R3 growth stage when the pods are starting to form is really the optimal time if you're just going to put one fungicide spray on. I know people, maybe a few weeks ago were wondering if they were going to put fungicide on their beans or not. The beans look pretty clean. There's not a lot of disease out there, but really in a lot of the research that I've personally done and other that I've seen, we can get a pretty nice response to the fungicide, even when there's not obvious disease symptomology out there. I think that I would not give up on this crop. Like I kind of started to say, it started off a little bit slow, but it's really come around. And I think from what I've seen in the past and what I expect this year, the fungicide should, pay for itself or do a lot better. So I definitely would recommend getting it on there soon at the R3 growth stage. And I think we'll see benefits in soybean fields this year.
How about the corn crop?
Yeah, corn also. I've been seeing a lot of planes flying. I know a lot of people are out putting it on. It's around that tassel time is especially if folks are just going to spray one fungicide, this is the time to get it on. I know we've seen in our research benefit to sometimes spraying 2 or 3 times, but really that one time is where you get the biggest bang for your buck. And the second or third spray you can see a little bit of benefit from. I haven't spent a lot of time in cornfields this year. I know tar spot is obviously can be a problem. The conditions seem to be such that we would be this year, and fungicide is a good way to kind of try to help keep that disease under control too.
Is there anything would you like to go to tell our listeners about new products for Bayer?
I think on the soybean side, we have some pretty exciting products coming in the fairly new future over the course of the next 5 years or so. So the first one is the HT4 soybeans, and so with that product, it'll have the option for a lot of different herbicides to be applied to it. So we can spray just like the XtendFlex system. We can spray Roundup, Liberty, or dicamba if we have a dicamba label. The soybeans are tolerant to dicamba. With the HT4, we'll add all of those herbicides along with 2,4-D and mesotrione, and that's slated for about 2027 for the launch. So we're still a few years out on that one, but I'm really looking forward to that. That'll be an exciting product. It'll allow growers a lot of flexibility in what they put on and give us a lot of options to use multiple modes of action to help protect the herbicides that we have. And then the HT5, the herbicide tolerance 5, soybeans are just a couple years behind that, and that will add all of those resistances plus a new mode of action, PPO, that will allow us to have even more choice in what we apply to the soybeans. So I think we're right on the verge of a new era in soybean weed control, and that'll be stacked on the industry leading genetics that we currently have.
Do you have any final thoughts on this growing season in Central Illinois?
It's just it's always important for growers to get out and scout their fields and to see what's going on because every year is different. And it's no different this year. It's an exciting year. It's exciting to learn something each and every year. And so I look forward to seeing how the crop turns out. I think contrary to what I thought about a month ago, I think we have potential for some real nice yields across the state of Illinois for sure, and across the greater growing regions of the Midwest.
Thanks, Jason.
Yeah, absolutely, Cesar. It's always great to talk to you. I enjoy our conversations.
This is Jason Carr for Bear on Back Roads of Illinois. This is your agricultural commodity markets update on back roads of Illinois. Corn futures finished in up 4 to 6 cents. Soybean futures finished in up 3 to 6. Wheat futures finished in up 3 to 5 cents. Now that we are going to talk about the livestock market for today on this afternoon. Cattle futures finished in up 3 to 5 cents. Feeder cattle finished in up 4 to 6. Lean hogs finished in up 8 to 10 cents. Texas crude oil finished in up 2 to 3 cents per barrel. Dow Jones. And welcome to the show with us. We see the wheat harvest in central Kansas, Oklahoma, Northwest. They are going to be wrapped up in these states that we've been hearing about. The wheat yields are pretty good at 36 bushel per acre in Kansas. Beside that, in the Northwest, it's getting to be hot for next week in Washington State, in Oregon. They will be pretty warm than normal for this weekend Northwest. Russia wheat has been impacting to their respective of the wheat in over there. Russia has issues with their wheat on freeze for May and diseases pressure on their harvest season for right now. In the Black Sea region have a problem with the shipping. You've been listening to Back Roads of Illinois. We got your cattle on feed report from the Department of Agricultural. The placement of the cattle on feed is 1.56 million per head more than last month. The weight of 600 between 699 per head. This been your update on the cattle on feed report for Back Roads of Illinois.